Amy Smith, and we're here from the Orlando Money Show, and we're very excited to have with us today as a guest, we have Johnathan Hoenig. Johnathan, welcome.
Thank you. Great to be with you, Amy.
It's great to be with you.
Appreciate it.
So I think, first of all, for some of our listeners, you have a company with a very interesting and catchy name. You want to tell people the name of your company?
Sure. Well, since 2000, I've run a private investment partnership, a hedge fund called Capitalist Pig. And for me, that's not a slur word. It's a term of endearment to be a capitalist pig. And, here, especially at the Money Show, but in America, we should be capitalist pigs. Money is important. Money is amazing value, and it's something we should want more of. How do we get it? We earn it. We earn it in the markets. We do it by thinking. So
not being ashamed of being a capitalist.
Hell no. I mean, America is the country that invented the term capitalism and to make money. And here at the Money Show, I think we're perfecting it. So
that's
becoming
awesome.
better, smarter investors, and so I've done that since 2000.
Okay.
That's the name of my firm, capitalistpig.com.
Well, tell us a little bit about, just in general, your progression and a little bit about your career, a little bit about you.
Sure. Well, Amy, since I was a kid, I've actually been always fascinated by trade. Trade has always been of true interest to me. I mean, even as a child, other kids were kind of playing sports or following sports. I was trading baseball.
And you were the
cards.
kid that wanted to write.
Yeah, or setting up a little business or weeding. Money and trade has always just fascinated me, and truly my whole life. In fact, I dropped out of college. I was studying at Northwestern in the late 1990s because I wanted to trade on the floor of the Chicago Board of Trade.
Oh, interesting.
That's where I actually got my start in the commodities world. And a few years after that, and as I said, in the early 2000s, I started managing other people's money. I opened an alternative investment fund called Capitalist Pig, and I've done that for the better part of the last 20 years. So.
Now, was this with commodities, your first foray into it, and are you still into commodities?
My first experiences actually were in commodities, which I think gives one a great perspective in understanding the breadth of investments in the world. So often we think about what's the market doing, and I would say, which market? Which market? Yeah, I mean, there's so many opportunities out there, especially now. It's part of what I'm going to be talking about actually at the Money Show today, but absolutely. So my first experiences were commodities, and I still trade commodities somewhat now, but Amy, my big belief, and actually what I think I've learned over the last 20 years as a professional investor is that it's not so much what you trade, it's how you trade. I mean, look, bull markets come and go. We've seen it in every asset class over time.
Right.
If you study, to study the markets is to study history. So we know that, bull markets come and go in every asset class. So my really belief, after doing this successfully, as I said, for a couple decades now, is that what's much more important is not even your prognostication of where you think the market's going, but how you invest, how you trade. And you have to have that consistent objective, what I say is an objective philosophy about how you invest, because that's going to serve you in every market, not just in bull markets or bear markets, but in every market. So that's my big belief.
Does that kind of go along with the market wizard's idea about you have to trade the way you trade, stick to your rules, and stay with that methodology of trading? I mean, there's some people that are value players, there are some people that are growth stock players. There's different ways of looking at the market. Is that kind of what you mean? Stick with your perspective on the market?
Well, look, discipline, what you're alluding to is basically discipline. And of course, people say, well, should I use a 10% stop loss order or a 15% stop? Which is the best stop loss order?
Right.
And at the end of the day, what is important is having a stop loss order.
Right.
Usually what kills people is that one time they say, oh, I don't need it this time.
Right.
I don't need that stop. Or I'll double down.
Right.
So what always kills people isn't that they even pick the wrong asset class. I mean, my big belief is that, you can even be wrong when it comes to the asset class, but if, you could really be the worst investor you could imagine. You could buy Pets.com at the all-time high. You could have bought, I don't know, any of these terrible stocks at the all-time high. But
as long as you don't take a big loss, correct? Then you can live another day.
That's the whole point.
Right.
That's what always screws people. It's not so much what they invest in, they make a bad investment. I mean, at best, as I said, I've done this for a couple of decades. Maybe at best I'm right 55% of the time, 60% of the time. The best investors aren't the wizards that, remember the old Carson thing? He'd hold it up.
That was the, oh yes, I remember.
Kreskin,
Yes,
he'd
yeah.
know the answer. No,
Right.
That's not the best investors that they're always right, but as what you're alluding to, they can deal with the experiences with that they're wrong. And so that's my big belief, is those basic fundamental takeaways. And you know what? Ultimately, it's like if you've ever played baseball, once you actually started listening to keep your eye on the ball, it works. Like, these things work. So, I mean, one of the things that I'm going to talk about, for example, at the Money Show today, is why the best piece of investment advice you'll ever hear is don't double down. Don't double down.
So there we have it. I think we want to keep our soul rules. Thank you so much.